humans will become quality assurance for AIs.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Felix, thank you so much for joining me today. Super excited to chat with you. All right, Felix, you are the founder and managing partner of Hartmann Capital. Hartmann Capital is a frontier tech investment firm seeking out global paradigm shifts like digital assets, virtual reality, augmented reality, AI, space, longevity, and more. You operate two funds. One is a long bias multi-strat digital asset fund, and the other is a venture fund focused on frontier tech. Previously, you founded Crypto Academy, a fundraising platform called Fund This, and you worked at the Startup Expo. And the reason, oftentimes, I'll just mention what you did previously, just 'cause I think it's interesting. But on top of that, this is just so perfect. Your background is clearly these pieces of this puzzle that are now Hartmann Capital and kind of your whole, everything. So I wanted to add that in there. How do you feel about that background? Do you think that my take is correct and they were important building blocks, or not really?
Yeah, no, first of all, thanks for having me here. Excited to be doing this episode with you. I look at life as a journey. Every single thing that I've done led me to where I am today. For example, before I was able to start an investment firm, before I was young, I was when I launched Hartmann Capital, 22, 23 years old, before people gave me the money, they said why did you teach me first? That's kind of where the academy came in. Or before I even knew that crypto was an opportunity set, I was a startup founder essentially, where we had an equity crowdfunding portal that used Bitcoin as a form of payment. So I was using Bitcoin before I was investing in it. And it was only then because we were users that I realized, wait a second, you know what? Bitcoin is more than just a form of payment. Why is it going up in value? Because back then it was $200 a pop. So sorry, what year was this? So Fundus was 2015, 2016, 2017 in that time frame.
Very cool.
And this was post Mt. Gox crash essentially. And the TLDR essentially is I think it was on 2013 that the Jobs Act passed, where equity crowdfunding for the first time became legal in the United States. And so we were one of the first movers to start working on equity crowdfunding and merging that together with traditional crowdfunding. And with interest from people in Venezuela, Colombia, they reached out to us saying, we would love to use your platform, but can we use this thing called Bitcoin because we can't use our domestic currency? And we're looking into it as a start, you just need customers, whoever is your customer, we'll take them, right? So we're hey, if the people from Venezuela want us, we'll take them. So we started looking into it. We started emailing with Coinbase and BitPay. We built the technology. And funny enough, essentially, if you can go to the Wayback Machines, I'm not making this shit up, you can find it. The Bitcoin is on our website, 2015, 2016. Funny enough, at some point, Coinbase was oh, wait a second, for KYC, AML purposes, we don't know if we like crowdfunding for Bitcoin, because essentially, you don't have to deliver anything, right? You could essentially collect money, not do anything. But that's what put crypto on my radar, and we were using it as a form of payment. But at the same time, that's when Bitcoin started taking off, right? This was a post Mt. Gox crash. It was in no man's land for the longest time, sitting around $200, $300. And then towards the end of 2016, was going from 200, 300, 400, 500, 600, 700. I think it ended the year around $600, $700. And that's when the trader me woke up and said, wait a second, these long-term breakouts, they don't happen for no reason. You can't just do pump and dump the last 6 months. Usually this means there's some fundamental shift, right? And this was also right around the time when I was reading the book 0 to 1 by Peter Thiel. And to me, this was one of those, it was a eureka moment. It was I'm reading this book and I'm digging deeper into the Internet of Money by Andreas Antonopoulos and looking at the actual technology. I'm wait a second, this is one of those 0 to 1 moments where it's a complete paradigm shift that can change multiple different industries, meaning blockchain itself, but then also studying more the hard money aspects of Bitcoin, where it's not just a form of payment used by criminals essentially, but rather this thing would appreciate in value because you truly understand hey, there will only ever be 21 million, because you understand that as the Lindy effect keeps going and it's getting more and more traction, well then corporates will buy in, governments will buy in, and so forth. And essentially that made me realize, hold up a second, I need to go all in crypto. And so what started with the Startup Expo led to me being at Fundus. Fundus led to me getting into crypto. Initially getting crypto was me trading and teaching some people. Eventually people said, forget teaching me, why don't you trade for me? That led to Hartmann Capital. Essentially, by now I don't do any of the other stuff anymore. And it's just all in on the mission of, finding, as you mentioned, like, paradigm shifting opportunities and finding the best ways to express those ideas through investment.
Amazing. Okay. So you founded the crypto fund, the digital asset fund in 18. I forget what month, but that is incredibly early. What was it like back then? Especially setting up this early crypto funds. I mean, I was around back then and there were not a lot of funds, and even like speaking to lawyers to set up entities to operate a fund in crypto was a lot of people didn't want to do it. So like, tell me about your experience back then.
Well, so this all culminated. I had so the mini background story, and I tell this a lot, but essentially, I had a consultant client I was helping with because I was getting more active in education. People started seeking me out for also like corporate advisory, and so I had a corporate client, Forbes in Manhattan, merchant bank out of Canada, and they wanted to launch a security token, essentially like tokenizing green energy. And so they flew me out to LA to meet the team, and I sat at dinner with the founder, multi-billionaire himself, Stan Barty, and I showed them my track record, like back then, literally my Binance account, and I showed them like how I, at 22-year-old, like traded up my money, like crazy multiples in short time. So they're like, "Why don't you start trading for us? Why don't we give you like $10 million?" And I'm like, wow, I'm 22 years old at the time. First of all, at that point, I think I only have ever met in my life 3 millionaires, period, right? Like a millionaire was still like this verified species that, you don't really know, right? And so first of all, meeting a billionaire and then getting just offered casually over the table $10 million, I'm like, well, that kind of money's out there. Bitcoin is more than just traders and like, and then back end is like very fringe. Crypto was extremely fringe back in 2017. So the fact that institutions want to get in, I realized in my head, this all happened within like seconds. Like, you can't say no to this. And so I'm like, yeah, we can do that. I go home and I Google how to start a hedge fund because I literally did not study finance. I studied political science. I thought I was joining the CIA. I thought I was joining the State Department, getting active like in the Middle East and whatnot. And instead, I realized the best way to bring change is make money first. And so I Google how to start a hedge fund, and I found 3 lawyers. Back then, it was Simon Revellos from Revellos Wahab. There was John Lohr from, I think, Capital Law Group. One other guy who never responds to my emails, forgot his name. But there was pretty much 3 guys only. There's 3 law firms that touch crypto. I called the first 2. I liked Simon better. And pretty much 1 week later, I sent him a check to incorporate Hartmann Capital and to get the show rolling. That was the faster part. The slow part was what you mentioned. Well, you need a bank account. But in order to get a bank account, you need an administrator and you need an auditor. And auditors back then I remember the conversation. So I talked to 3 auditors. 2 of them, I'm trying to remember the name, but one of them essentially said, yeah, well, in order for you to work with us, you need a custodian. So it's like, in order to get a bank, you need an auditor. To get an auditor, you need a custodian. And then I talked to the custodian. Back then, like Kingdom Trust was like one of the only games in town. And Kingdom Trust said, like, yeah, pretty much you can only hold Bitcoin. So like, we don't custody anything else. You must hold Bitcoin. And so like, essentially you can't even really trade it. Like, you would need to work with an OTC desk where it goes from like bank account to Kingdom Trust and nowhere else. So you're not even on Coinbase. Doesn't fly. So I'm like, if you want to trade, forget about the auditors. And so it was a really complicated system where essentially back then we ended up working with Richie May. They were one of the first auditors that was actually cool with using proper exchanges. We didn't use a custodian because custodian meant you only trade Bitcoin, and that seemed silly to me. Like, why have a crypto hedge fund when all you do is Bitcoin? And so it took us 6 months. So it took us six months to get everything rolling, everything set up. And funny enough, the silver lining now is that by the time we were ready to go, Bitcoin went from 20K down to 10K. And that big investor, that merchant bank out of Canada, said like, oh, no, wow. I think the crypto opportunity's passed. It's over. So I was there. I'd already signed annual contracts with all these service providers, which, funny enough, my admin back then with like less than 1% of the AUM that I have today was more expensive than what I pay today. Like, they were kind of, I don't say they were ripping me off, but they were like, they could just charge anything because like there weren't that many admins that would work with you, especially it was a high brand admin like Trident. And so I was like, okay, what do you do now? I already signed the documents. I already wired the money to the lawyers. Like, I'm here. And I said, look, I believe this is a long-term opportunity. I think crypto's coming back. I've always had this rule in life, kind of like, just one more year. Like, just give it one more year. So I'm like, all right, we're launching 2018. Just give it 1 year and see what happens. 2019 wasn't all that much better for like altcoins, to be honest. When Bitcoin grew, but almost every altcoin continued to plead lower. And so I played the same game in 2019. I was like, just one more year, see what happens, and that got me far enough to like essentially get towards DeFi summer, and then DeFi summer changed the whole game for us. And that's when like the growth started compounding. But those were some like the early days and years of Hartmann Capital. And for context, we did end up launching with about $217,000. So
That's amazing.
Tiny AUM where every person with half a brain would tell you, don't launch, don't do it, because what's we don't even charge 2% management fee. We charge 1.5% management fee. So 1.5% management fee on 200K, but most of which was some of my own money. So I don't even pay management fee. Like, yeah, you don't even pay a month worth of rent with the annual management fee. So, but it was a long-term bet. It was a bet that like you're in the real world. Like sometimes people get lucky, and like of course there's luck in my journey as well, but there's also a lot of challenge. But like unless you get lucky that you can just launch off with like $30 million, well, you have to start somewhere. And so for me, starting somewhere meant you start with $200,000, and then you have to prove day by day, month by month, to LPs, to yourself, to future employees, and so forth, that like you have a right to be in this business. Which I think, there was some distortion that happened 2020, 2021 in markets general with VCs and with hedge fund managers, where the market environment was so easy that people kind of could luck into being in this business. But I think over long stretches of time, this is a business where like you have to prove that you get to be here, right? Because it's a competitive market, right? Every LP has a finite amount of dollars that they need to decide where do we put them. And so why you, right? And whether that is because of returns, whether it's because of your insights. And when I say insights, also not just like that you write industry research, but that they believe, because, history doesn't always repeat, that you have the capability of at some point the next 10 years generating outsized returns.
I love that. That is an incredible story. I had no idea that you launched with 200K. That is such a cool fact right there. All right. So I want to push it up to today with your crypto activity. So you run a long bias multi-strat digital asset fund. All right. So can you tell me about how you make investments there and what you're looking at? Is it fair to call it like a liquid venture fund in some sense, or how do you? Because I imagine you're not doing like trading and like high frequency trading or any quantitative trading. It's more so research driven, fundamental based, etc. But tell me, I'm not sure.
We have, so because multi-strategy fund, we essentially can be whatever the market provides us with at the time. And so it's because it has been now 7 years, right? In those 7 years, we have done everything. There were periods, for example, after Terra Luna collapsed, for example. After Terra Luna collapsed, to me, there was a clear signal that the bull market wasn't going to come back anytime soon, and that there was a lot of blood in the water. And essentially, let me take one step previously. I wanted to short Terra Luna, but everybody that was smart in the industry told me there's no way. Chump would never let them fail. In fact, I think there's even podcasts with me and Shalang, Shalang Tang from Ledger Prime, one of the smartest market neutral guys. Like he told me Chump would never let Luna fail, right? I think what Terra Luna told us is that nobody's too big to let anything fail, right? Like people would have said like Axie could never fail. Delphi would not let the Axie fail. But the truth is, who gives an F who Chump is, who gives an F who Delphi, nobody is big enough to matter that much that you can just single-handedly keep something that shouldn't be alive, period. And so when I had that realization, for example, like we were primarily focused on long short. So we did incredibly well, for example, in 2023, where we just long short. So like we would find fundamentally sound projects, go along them, and a lot of times just benchmark like Bitcoin, ETH, and so forth, and then identify what are the overvalued Ponzi's essentially and bet against them, right? That was a period where we did that. There's other periods when when I realized, I think it was like 2023, 2024, meaning this is after FTX now. Sorry, Terra Luna was 22. So 22 was a long short. 2023, 24, there was a period where like I felt like fundamentals didn't matter. Like some of the best projects, like a Uniswap was just bleeding lower and lower. And like even though it's the biggest PMF product, Maker wasn't really doing anything, right? Like if you made revenue, it didn't matter. So in that period, we focused more on kind of like high frequency, if you want. You're like really high volume, momentum-based trading, right? And then there's other times in bull markets, I think in bull markets, which I think we're kind of like in the earliest innings of it, where that's when I believe kind of what you're highlighting at makes a lot of sense, meaning thesis-driven liquid venture. Why? Because the way to leave the most money on the table, I think, in the bull market is usually to overtrade and to rotate too much, because all the movement in most of these crypto assets usually happens in a couple of days. So it's like huge move, then the token tapers off for a long time, and then somebody else moves. So like if you're always chasing, you're going to leave it behind. So instead, you should just figure out like who will benefit the most from, a regime change, like a bull market regime, essentially. Place your bets and then maybe make them capital efficient, but that's it. Like for example, like if in 2021, like all you've done was say, okay, I think in this regime, like Solana will do well, I think Luna will do well, I think Axie will do well, and you pick maybe a Thor chain, you picked a few, you'd have massively outperformed anybody, regardless if they had done thousands of trades more. So, sorry, long answer to your question. We're multi-strategy fund, which means sometimes it's fundamentally driven. Sometimes it's long short, which is also fundamentally driven. Sometimes it's purely momentum, where I say fundamentals don't matter. So, and that answer is interesting from the perspective, it would be almost easier to market myself and sell myself if I chose one. But what 7 years have taught me is that this market just changes so much. The crypto market goes through an entire cycle in 1 year that the equity market would spend 20 years in. And the easiest way I explain this sometimes even to LPs, I'm saying, look, in 2020, you know what the hottest thing to sell was? It was DeFi funds. You know what has done absolutely horrific since like 2020, since maybe March of 2021? DeFi. Lots of traction, but it's down only, essentially, for the longest time, right? And I think the same thing happened again last year, where last year, like, people started popping up AI funds, right? Because like AI was the hot thing. And chances are that like some of these AI tokens have, well, some of them already have done horribly, where they're down 95%. But that shouldn't be so focused. Like, you need to be nimble. You need to be able to switch in between thematics, and you need to be able to switch between strategies.
I mean, you're talking to a guy who ran an NFT fund, right? So I totally understand that, of being nimble and not wanting to be stuck in a specific subcategory. Yeah, no, definitely. All right, so there are these weird regimes in crypto. It's like we had the DeFi summer, then we had the NFT craze, then we had meme coins. I mean, there's other things, but and then the AI kind of trend recently. So looking forward, are you looking at what are these other kind of subsectors or trends that I can get involved with? Or are you thinking, actually, no, because of regulatory changes, it's now gonna, now fundamentals are in place. So it's if you generate cash, so that's kind of the thing now. Or I guess looking forward, are you trying to position yourself on the next wave, or what are you looking forward to over the next, we'll call it 6 to 12 months?
So for me, the two are converging. Meaning, yes, I believe fundamentals now matter, period. And it's for very, very simple reasons. The crypto market and its native participants, because like the crypto market pretty much is solely driven by its own native participants. Like there's an entire category of people, generically usually millennials, Gen Z, that only trade crypto. Many of them have never held equities in their life, right? They're just native to the space. But a lot of them have been burned out by crypto, where some have actually exited the space and they're not returning. And why is it? Because a lot of this is a game of hot potato, right? Like we rotate through these themes, and every time like you get a reward for being early, and the last one's holding the back, which usually is retail, right? Like they end up losing massive amounts, right? The game needs to fundamentally change, and like that's not just like a culture, like, oh, it needs to change, and like from a morality perspective, but rather because markets are efficient. If people get burned out too much, they will eventually churn out, right? And so you need kind of like a buy of last resort, right? And to keep it very simple, like that is what earnings are for, right? Like if a project actually has earnings, right, it can buy back its own token, right? And so like even if nobody ever speculates on this again, if it is fairly valued and it makes good money and the earnings are growing, right? Like you don't care what's happening in the market. And even in the bear market, when volumes are low, it will continue to appreciate slowly, step by step, regardless. So I think one, it solves for the problem that everything's a race to zero over the long term, right? That's what revenues are solving. So like, there's no way around it. I think that is where crypto's going. The next piece of it is also like, where does growth go? Because like, of course, nice P ratio is one thing, but also like, where does the growth happen? It's two different things. And to me, that is where can Wall Street adopt crypto next? And so like obviously the big narrative has been stablecoins. So like, Circle has been plowing through the roof. Everybody wants in on the stablecoin thesis, and it makes sense because stablecoins have now been getting adopted everywhere on Shopify, Stripe, all the fintechs, whether that's Robinhood, Revolut, Klarna. Everybody's talking about stablecoins. Like, so they're all integrating. Why? Because it makes their processes more efficient. They can save money, right? Now, the interesting side effect is that everybody, in my eyes, period, meaning normal retail, will start using stablecoins within the Trump admin. Like the regulation got approved. Now there's going to be a little bit of a couple months like slowdown for like actually rolling out the product, and people will start using stablecoins whether they know it or not, right? But what's happening underneath the hood is two things. One, every single time a stablecoin transaction happens, it settles on chain, which means whoever that chain is, whether it's Ethereum, Solana, it doesn't matter, they're generating gas fees, right? They're actually making earnings, which now high level already makes it interesting to Wall Street because everybody's buying Circle. Circle is now, I think, almost the market cap of Coinbase, which is crazy. They realize, well, how else can I play this trend? Well, every time the stablecoin moves, Circle doesn't make money. Circle makes money based on the interest rate, and interest rates are going to come down to zero, like they're going to go lower. So ETH might be a more interesting stablecoin play than Circle is, right? But then take a step further, you say, okay, everybody's going to have stablecoins, which means everybody has a wallet. And when everybody already has a wallet, like if I have a wallet on PayPal, whether I know it or not again, right? It is very easy for PayPal to start offering me other things. They're going to say, hey, you don't just, what if you want to hold tokenized stocks? What if you want to have, essentially have every asset you currently hold tokenized in your platforms? And then if you want to make it capital efficient, again, are they going to create is it realistic for them to create full-on flush, centralized lending markets? No, they're probably going to start tapping into Aave, right? They're probably going to tap into the existing frameworks that are already there. And so then that also becomes interesting where, again, if you forget about speculation, you go utility first, right? These things can become big enough where, let's say, like Robinhood already announced they're launching tokenized stocks on Solana and Arbitrum in Europe, right? Okay, now institutional buyers are thinking, well, we already got Bitcoin via the ETF. We got some Circle. How else can we play this trend? Solana's going to do tokenized stocks. Or, Robinhood is earning extra interest by lending out the shares of those tokenized stocks on Aave, right? And so to me, that's kind of the model that I'm thinking through. It's like I'm trying to think through the value chains of how are we actually going on chain? How are billions of people going to use this stuff, right? And the microtransactions they're making, where's the value that previously would have been accrued with card networks like Visa, MasterCard, and so forth? Where is that going? And what is the next adjacent product that can be sold to stablecoin users, like tokenized stocks and so forth? And so that's how I'm constructing the portfolios separately. And these things exist. I think the next step, the puck isn't quite there yet, but there's the first signs of it. People call like the internet capital markets, which I will mostly shit on. But the reality is, in my eyes, every startup, every company will be tokenized. Like the startups will be backed via VC. Even if you're Web2 VC, like I'm backing VR startups, I think within 10 years, maybe not 5 years, but let's just call it to have a 90% accuracy rate. Over the next 10 years, every startup will be tokenized. Why? Because most VCs' biggest issues include, for example, liquidity, right? Like there's a huge swath of Series A, B, C companies that might even be profitable, might be good businesses, but they're just not meant to be unicorns. But if you could tokenize them, you could actually have liquidity whether it's VCs or founders could take money off the table. Same with there's huge secondary markets for, whether it's Kraken shares or Neuralink shares and so forth, but they're all individual ATSs, silos that could be unified through one globalized layer of tokenization. And so that will happen 100%. There's these early, again, back to internet capital markets, there's these early instances like Believe, like Launchcoin, right? But to me, again, they're cutting corners. They're trying to be the next meme coin launchpad, really, while, and I said this publicly, while LARPing as startups. Because when you go on the platform, it even says this token does not give you any rights to revenue. It does not give you voting rights. If there's ever any kind of outcome, you have no claims to it. So the company could get acquired, it could IPO, they could make distributions, you get zero, nothing. That's a meme. It's not it's like you get a membership token for NVIDIA, but if NVIDIA makes money, you don't benefit from it. So long story short, I think we're heading into the prime season of crypto where everything gets tokenized, and you just have to make sure where do those value flows happen, and then attach yourself to it.
One of the funny things I think is happening is that the crypto crowd is talking about fundamentals and cash flow and kind of rights, as you just mentioned. Meanwhile, we look at Circle, like Circle stock, which great company, but like the market cap right now is outrageous, right? I think you just mentioned previously it was just below Coinbase right now. I thought I read on Twitter today that it was like on par with Coinbase or something like that. But it's
so. I made a tweet. I think when the stock first launched, equity share price might have been like $80 to $100 a share, and back then it was 1/3 of Coinbase.
crazy.
It's like $280 a share,
Yeah.
which means we're probably right around the place where it's on par, which is crazy because if you actually read the fine print, Circle shares half of their revenues with Coinbase, so that.
So like crypto investors are now talking fundamentals and getting, really nitty gritty and into the revenue and whatnot. Meanwhile, TradFi investors, like TradFi, maybe retail, maybe not, are just like going full YOLO and loving Circle. But interesting times.
That's something that's sort of spent like, these 7-8 years now, is that no matter how smart or smart money is, like whatever realm you're getting to, even at the highest level of finance, people are still trading memes. Like maybe you call it something different. You call it narrative. Call it momentum, right? Like there are a number of Wall Street shops that will trade Circle because of momentum. Somebody like a Paul Tudor Jones, I've no insider clue whether or not he actually traded Circle, but like, it's not like Paul Tudor Jones might be trading a Circle for the narrative. So like, stablecoin's a big story. How can somebody with, call it, $1 billion to deploy? How can somebody with $1 billion to deploy, get that exposure in stablecoins? Well, there's really only one or two options. You put it in Circle, you put it in Coinbase, and Circle is a pure play, while Coinbase has all kinds of other stuff going on. So if you want pure play stablecoin exposure, you just plop it in it. The same way that, like, of course, NVIDIA is actually good earnings, but like people said, how do I get AI exposure? NVIDIA was kind of like a pure play GPU. Like the more people use AI, the more they use GPUs. Who sells the GPUs? It's NVIDIA, right? So there's power in the simplicity. But I think long term, us people now, I think the place where we're at now is, okay, people got exposure to Bitcoin ETF. You see that in numbers. People got exposure to Circle. You see the numbers. Now I think they're entering that education phase where they're doing the diligence, realizing, whoa, these two trades were probably some of the best returns we've had in the last 2 or 3 years, right? Because I think ETF launched when Bitcoin was still at like 30, 40,000. So you still like triple your money. Circle IPO was like, I think it launched like 30 to 50. If you're able to get some allocation before, and was I think 31. And even if you got it at the end of the first day, you got 80. So you tripled your money in a week or two. So I think naturally people will be spending time, okay, we got to understand the space. Where's the next opportunity?
All right. So you and I've been following you obviously for years, and I've known you for years, but we have a lot of the same theses around, the metaverse. And the metaverse is now not a cool term. It's something that I'm a big proponent of, and it is hard to define. It's kind of like this all-encompassing marketing term for like a more digital future, or there's tons of ways to define it. But how do you, when you're looking at Hartmann Capital and you have this digital asset fund, you have this venture fund, how are you talking about it publicly? That, hey, do you say that we're focused on the metaverse, or do you say frontier technology as well? And I guess like, what is your thoughts on the term metaverse?
I was still using the term metaverse until somewhat recently. And I personally, like, if somebody were to care enough to like hear it out, I genuinely believe the metaverse is probably the cleanest term to describe what I'm actually trying to describe. All that being said, because I understand how investors think, meaning you send an email, you send a deck, and they take a 20-second glance while forming their opinion. If they're going to form their opinion in the first 20 seconds, they misunderstand the term the metaverse. They're not going to take the 5 minutes takes to understand what I mean. I already lost them. So I've finally given in, and we're no longer using that term. I still believe it's the right term, but you got to work with the market. So if the market doesn't understand it, because essentially when I say the metaverse, what I refer to is like, the digitally native world, right? The digitally native world that people might care as much, if not more about than the real world, right? And when I say the metaverse, I actually think of things which people can probably relate more to. When I say the metaverse, I don't think of Sandbox. When I say the metaverse, I don't think of Decentraland. When I think metaverse, I think Roblox. I think Fortnite. I think Minecraft. I think virtual reality. I think like, full like world models where like AI can generate worlds in real time in the long term, where even the NPCs are AI driven, where they can have full conversations with, full relationships with, right? To me, that's the metaverse. And that metaverse, if you just looked at the numbers, is actually extremely attractive, right? Roblox has, I think, roughly 80 million daily active users and 350 million monthly active users. So there is more monthly active users on Roblox than there are citizens, or no, not citizens, people living in the United States of America. That is massive. So like, and you look at the Roblox stock, Roblox has been doing pretty well. It's nearing an all-time high. So when you take that lens and you take that framing, the metaverse is alive and well. It's making money. It's growing. It's got the hearts and minds of Generation Alpha and Generation Z. Like you even look at the Minecraft movie came out recently. It was like one of the biggest blockbuster hits in recent years, right? So I think people realize that, but I think, and we can throw the blame at crypto for this. I think the Web3 world tainted the term for the intermediate. I do think the term will ultimately come back just because Facebook rebranded to Meta, and that itself is like so big, right? Like a lot of industries go through like times when like terms become ugly. I mean, but then again, crypto is also really good at reinventing itself. Like in my short time, well, now it's 8 years. I've been around for crypto for a long time now, but in that time frame, we used to call it DLT, distributed ledger technology, right? We called it blockchain. Nobody really calls it blockchain anymore. Web3, right? With the metaverse, with DeFi, crypto, of course, digital assets. There's so many different ways around it to call the same thing something different, just because the last term has fallen out of vogue, and to give it a new term and it's got some freshness to it. So all that is just words, it's marketing. So when you strip all that away, like will we come up with a new term? Apple, they called it spatial computing, right? Spatial computing, VR, it's all just terminology. It doesn't matter. But you have to look at its fundamentals. And to me, the fundamentals are actually extremely interesting, right? Why? Because you look at, like, for example, like let's say virtual reality and augmented reality. That is the first computing form factor that can actually go mainstream since the smartphone. And these computing revolutions, they only happen every so often. And you go away from the gamey side of reality. You think about AR, for example. So these guys right here, these are the even realities. So these are glasses. They weigh maybe 40 grams. So they are probably lighter than most people's glasses. All the compute is here in the back. That's all the computer is. And there's a screen in the front. If I move it, you might see that there's it's a micro LED screen. So these things you can actually wear 24/7, right? Like I think it's like 16-hour battery life, and it's light. It doesn't feel heavy. It doesn't look clunky. If I wear it, I might look like a librarian, but like it's not. I mean, they're normal glasses. Like if you were used to seeing me with glasses, this would be it. Why is this interesting to me? This is interesting to me because like AI has obviously hit product market fit, right? Like we use ChatGPT every single day on phone, on computers, and so forth. But if you want to bring AI truly into your day-to-day, you have to ask the question, how can you give it all the information it needs to be actually truly valuable to me? And so AI needs to be able to, it needs to see what I see. It needs to hear what I hear. It should be able to speak to me, and it should be able to show me things, like enhance the world around me. And, I've ran this mental experience back and forth, and there just isn't a better form factor than glasses. Because you might say, okay, but what about, like, I don't wear glasses. What about AirPods? Okay, well, AirPods, women have long hair. Long hair covers them all the time. The camera's blocked, right? So like if there was a camera on the AirPods, right? Like, 5 out of 10 times for women with long hair, like you cover it, doesn't work. People experiment with pendants. Okay. Anybody who's ever worn a necklaces flip around like every 5 minutes, right? Like they turn. It's like, again, camera would be blocked. Not that great unless it's a 360 camera. I know they talked about with John Ive, whose company got acquired for like 6.5 billion by OpenAI. What if it's like a puck you put up in your pocket, right? And then the camera's popping out. Is that really better than glasses? And then they said, well, when you're not working, you put it on your desk. I don't need it sitting on my desk because I already have my phone. Like if I need something that's down, like my phone can already listen to me. I can talk to it. It can talk to me. I think one of the biggest things, again, is like the field of vision. Like, does it see the world I see? Like when I turn my head, the glasses turn with me. And that's really powerful. And so when you think about it from that perspective, two things happen. One, it's a whole new computing platform that enables use cases that weren't possible before. Because now, the same way that the iPhone had unlocked new opportunities like Uber, how are you going to do Uber without a smartphone? Like, yeah, I'm not going to bring my laptop with me to the restaurant, and then after I'm done with it, let me pull up my laptop. What's your Wi-Fi? Can I connect to it? Like, let me call the Uber. And then you stand out on the street, you can't see the car. Or let me go back inside, check. No, you needed, like, a mobile phone was able to unlock that use case. Deca unicorn of an opportunity. And to me, smart, like, again, it's not just smart glass and VR, but like just new form factors that are AI native enable that. So I think that's one, but then also to bring it back to the metaverse, because you mentioned that kind of as a connecting segue. The metaverse also happens when those two worlds start blending, right? When we see with like Meta already has mixed reality, where it's all of a sudden the games are in your real world, right? Like I've played, for example, like it's called Demio, which is like a Dungeon Dragons in mixed reality, where everything is on the real table. Me and my brother, we're walking around the real table. We're here, but there's an entire game board, like game on top of it, where the soldiers are actually fighting and like it's animated and so forth, right? So like, again, you find a way to enhance the real world. And I think to me, that's also when like this whole vision of the metaverse really comes true.
Man, I mean, you said it beautifully. Like I often find it very tough to define. That was well said. Sometimes I call it like the experiential internet. To get internet, you can taste, touch, feel, and actually experience.
Yep.
But if you had to break it down in terms of like what subsectors are in the metaverse, is it like, or make up the metaverse? Would you say it's like digital assets, virtual reality, augmented reality, AI, maybe BCIs, maybe robotics? Are these kind of, and I'm missing some few, but like, is that kind of like the rough, like just a more digitally enhanced future? Are these kind of the subsectors that make up the metaverse?
Yeah, so we have a whole trend craft. It's not a new deck anymore, it's an old deck, but essentially where I mapped out like what's part of it and what phase of the market they're in. You could say, if you go all the way to the right, the plateau productivity that's fully maxed out, social media is actually part of it. Like Instagram and Facebook and TikTok, right? Like when you're scrolling Instagram, is it a world that's physically there? No. You're connecting with strangers across the internet, and probably a lot of them are bots. You literally connecting with like AI NPCs, so to say. It's just in the most simplistic design possible. It's 2D and it's flat, right? But that is like the earliest instances of metaverse, right? Like, I mean, notice this even when we're on like, I mentioned this like on an episode like 3 years ago with Pomp, where I said like crypto Twitter is like such a great early example where you've got these people with PFPs and they're anonymous characters and they got their own stories. Like you might have multiple identities, right? Across different Anon accounts, right? So that's stage one. One stage before that, meaning we're still earlier to the trend, is what was UGC gaming. So those are platforms like Roblox, UEFN, Minecraft, where kids can create their own worlds, but they're like social first. So it's like the 3D version of Facebook, if you want, where while Facebook and Instagram attracted, our generation, like called millennials and up, right? Gen Z and down tends to be a lot more on spatial worlds. Like they hang out on Fortnite, they hang out on Minecraft, they hang out on Roblox, right? And I get this validated where, funny enough, like when I pitched my first VC fund, I pitched it at the metaverse, and a lot of LPs are like, yeah, I don't know, but like, I trust you, whatever, we'll do it. By fund two, they said, you don't have to tell me, I've got kids. And my kids, they spend all day long on Roblox. One of my LPs, shout out Larry, he mentioned like his son met like 3 of his ex-girlfriends on Roblox. It's like they actually like they're forming relationships, again, digital first, right? And then you go early in the trend. I think in the trough of disillusionment, right? You find virtual reality, and to me, that's why we've been so active in it. I think we've underwritten more VR deals in the last 3 years than any other fund in the world. And I'm really bullish on, because even though it's a very hated sector, you talk to most people, they're like, I would never touch VR, right? Like it's been a hype, whatever. But I think it's in a trough of disillusionment where the average VR startup, you can probably back at like a 2 to 3x revenue. Meanwhile, they are growing, and Meta bet the whole house on it. Google is now launching their headset with Samsung. Apple has already released the first one, but the first one was just a dev kit essentially, and now they're working on the second one, which is likely going to be a Vision Lite, not a Vision Air, because there's MacBook Pro, MacBook Air, so there's probably like a Vision Air coming. And even gaming companies like Valve are getting involved, like to launch a gaming headset, like the Deckard. So like all the big companies are trying to launch their own VR headsets and own that platform, right? So I think you're getting a lot of growth for the steepest discount you could possibly imagine. And for what's worth, there's zero hype in VR right now. It's negative hype, if anything, but there's actual kids that love it. So there's this, like, for example, most people, I forgot about mentioning a case study sometimes just because I'm so used to it, but most people haven't spent much time in VR. There's, for example, this game called Gorilla Tag, right? Gorilla Tag is the most popular VR game right now alongside Animal Company, where essentially you are playing a gorilla where you move your arms like this, right? So you don't have to walk around, you just move your arms like a gorilla, and you play the game tag. So the way we used to be kids, we ran around the schoolyard playing tag, I got you, right? They're gorilla in VR, running around cute, amazing fantasy worlds, like, like in the jungle, at the beach, in a canyon, and so forth, or in a snow place, we can throw snowballs and like all kinds. Like, it's just interactive social fun. Where a lot of times these games in VR, they're not even linear, where it's like you have to complete quests and do this and this and progress through the story. None of that. It's a sandbox. It's a social sandbox where they just put a lot of fun into interactive things in, and then the player and their imagination does the rest. And the reason I mention this is because this game has, I think by now, done over $150 million in revenue. They got over 1 million daily active users. There's 1 million kids strapping on the headset every single day, not just for VR, but like just to play this game. And so this holy grail of social VR, it's happening, it's real time, but it's probably one of the most under-discussed opportunities. Now we go further left. Now, so we're in this graph, right? Plateau of productivity was social media, then you got UGC, then you've got VR. Now we're going up the slope. That's what I think Web3 is. I think Web3 is still falling, trying to find a bottom in the metaverse context. Because the truth is, so far, there haven't been really any case studies of success, right? Like, you've had individual things that worked. Like, hey, it's cool to be able to like own your digital, like your assets, like your in-game items within NFT. Yes. But then how do you solve, for example, moving them from game to game, not just technologically, but also from a business perspective? Because like a lot of games, like in VR, for example, they're free to play. The game makes all the money selling in-game assets. So why would I want somebody to bring their stuff from another game over when that's how I make my money, right? So like all these things still need to be figured out. But I think at some point, like, I mean, again, centralized ownership makes sense. Like, owning your assets makes sense. I think the whole play to earn didn't make sense because you're playing, like, I always compare it to like the NBA, right? If you and me play a game of basketball, we're not creating value. Why would we be getting paid to play basketball with each other? Now, if we play such great basketball that people are willing to watch us, right? Or even better, another example, if LeBron James and what's called Jordan were playing together, but in a private court with not a soul watching, guess what? They're also not making money. Nobody sees it. Nobody cares, right? Like, it's just them. Now, the difference is, are there people viewing? Can advertisers make money? Can there be sponsorships? Can seats in a stadium be sold? And so forth, right? Like, meaning there's real economic value associated with a bunch of guys playing basketball on a court, right? Then yes, they can get paid for that. And so I think the same thing applies to gaming, right? You could turn something into, like, that's where esports comes in. Like, can esports and Web3 be combined in some way, shape, or form? For sure, that can be figured out. But value has to always be tied back to earning tokens, because tokens are at some point pseudo equity ownership. And why the hell would you give away your equity for free? So I think Web3 is there, going back over the hump. There's AI on the up. I think AI has obviously a lot of hype, and at some point there's going to be some disillusionment coming. We're not there yet. I think AI is so revolutionary that it's going to challenge a lot of the old frameworks, a lot of the old ways of both how games were made and how games are played on both ends of the spectrum, right? So we're still active allocated there. Then like there's stuff like BCIs and mixed reality that's like much earlier. Like we're early to that. Like BCI is something that personally interests me a lot, where we've been studying it, looking into it. For example, the whole idea of like, what if you don't need controls anymore? What if you don't need to type anymore? Instead, your input is your thoughts. Like, you can literally command devices with your thoughts. And so we've been studying that, because essentially there's like sublingual BCI where essentially when you can do this as an experiment, whether at home you're watching this or Andrew, think of saying something to me. Just think of it and see if you feel something in your mouth.
I do.
You feel like a tiny little twitch, right? Because like essentially your muscles still emit something. So there's like electronic frequency that an EMG could pick up, right? So for some of this device that might go like underneath your mouth, right? And there's like a little sensor, and that can pick up these electronic signals that your muscles spit out. It's an analysis, and you could communicate with the devices just using your thoughts. But there's, of course, there's training still happening. For example, making sure that right now, like one of the companies we're looking at, they have like a 50% accuracy rates, meaning half the words it doesn't interpret correctly, right? So there's training that needs to happen, but then there's also coach and style. Like, are people really willing to wear? There's this thing coming out of MIT called the alter ego, which was this huge thing that goes down the side of your face. Like, will people leave the house wearing that? It's the same thing as VR headsets. We do need to the coolness factor. So, and by the way, I should have said this at the beginning of the podcast. I can rant quite a lot. I can go like long.
No, this is amazing. Yeah. This is exactly the stuff I like to talk about. So this is perfect. All right. So I want to talk more about each one of those subcategories shortly, but I want to touch base on you said mixed reality was far away. What do you consider AR? Like your AR glasses, is that mixed reality?
Nope. So just to explain the R, so there's XR, which is the umbrella term, right? Extended reality. And then you have, these are AR, augmented reality glasses. You might even take one layer before that. I don't have them here, but the Meta Ray-Bans, they're smart glasses because they don't even have a screen on them yet. I think the next generation has a screen. So there's just AI smart glasses, no screen, AR glasses that have a screen. Mixed reality would be, for example, the Quest 3, right? Like the new Meta headset, or the Apple Vision Pro. So the Apple Vision Pro, where it is a reprojection. So it essentially films the room around you, it reprojects it onto a screen, and then it overlays digital things for you. The reason MR is a bit of a ways out is, I would say, for 2 or 3 reasons. One, AR glasses are much smaller. Like, the whole point is, like, can we get these below 40 grams? Funny, like, weight is something I didn't know, but like weight plays a huge role, because apparently there's been studies that like you shouldn't have more than 30 grams on the bridge of your nose, because otherwise people can feel pain after a certain amount of hours, and it prevents long-term wearing of them, right? And also, these things can last 16 hours. Now, the Quest headset lasts about 2 hours. If you use a battery pack, maybe you can get towards like 3 or something. And so that means this is really relegated towards just like gaming. Okay. So problem one is distribution is much lower. I asked this question to my teams yesterday. I asked them, as of today, what percentage of your players are using Quest 2 versus Quest 3 versus Quest 3S? And the reason I asked is because the tech specs are different. Like, Quest 2 doesn't have mixed reality yet. They had a really ugly black and white mixed reality, but doesn't really count. And so the unanimous consent amongst, and we're talking about over 2 million monthly active users here based on these games, 40% plus still use Quest 2. And then it's about a 30-30 split between Quest 3 and Quest 3S, which means if you're a developer, you're losing half your audience if you're making mixed reality games. Just like out. And then number 2 comes in, which, funny enough, when you look at ads from Meta and so forth, usually you suffer from, there was a term for it. It's like, I can't think of the right term, but it's something like luxury bias, meaning you have people in Silicon Valley with 400, 500K a year salary pluses, thinking, oh, how cool is mixed reality? I can have this in my luxurious home, with like, this, like, Seth probably lives in a mega mansion. Like, you can do a lot of cool things there. Now, the reality is, a lot of the people that use VR, they probably live in small apartments. They don't have a lot of space, right? So is it really beneficial for you to play games inside your home when your home's already pretty tight as is? Don't have a lot of space to run around. Like, there's a really cool game called Spatial Ops, made by some of our friends. We didn't invest in them, but Resolution Games, really great company, where it's essentially like an MR. Think of it like paintball. So you can run around your home, you can hide behind physical objects, right? Like use as cover and so forth. But how many people have enough space to use that, right? And I think that's part of it where MR falls short. Versus, like, ideally, this is counterintuitive, but for VR, ideally games should find a way to enable seated gameplay for 2 reasons. One, because again, the space is limited for some people. Like, if you are, let's say who's the core audience? We're talking the core audience of VR right now is like 10 to 15-year-olds. It's not their house. They probably don't want to annoy the parents running around. They're probably in their room. They might have another sibling living in the same room, or the room's very small. And so then, okay, you don't have much room. You're probably better finding a way to make this game either standing. So, for example, that's where Gorilla Tag said, hey, we're not using our feet, we're using our arms. So you can stay in the same spot and move around like this, right? So this is a form factor solution, or seated. And then the second reason is, now I'm blanking. One was space, and the second one, of course, is exhaustion. Like VR can sometimes feel like a workout. So if your game is maximized on activity, like your player might get tired after 30 minutes to 40 minutes and they're done. And then it almost feels like a workout. So your game should still be relaxed and enjoyable to some degree.
Do you think that you were talking about your AR glasses and, getting them down to 40 grams, and a whole bunch of people are working on AR glasses specifically. Are they going to become the dominant compute device? Are they going to eventually outcompete your iPhone or your smartphone?
So interesting enough, and just a segue into that one, I do want to highlight that AR and VR really have different use cases. VR is like gaming. AR to me is like human augmentation. How do we make ourselves smarter, better, faster? Like some of the apps on here, for example, is real-time translation. 3 weeks ago I was in Japan. I could wear this. I was wearing this, and I have a translation app on, and all of a sudden, whatever I hear in Japanese, like on a subway or I attend a sumo tournament, real-time translation in English using AI in front of me, right? Or there's a cool app built on this where it can list our conversations, and based on what we talk about, contextually enhance what we're saying by, for example, maybe you mention some jargon. It will give me a definition of that without me asking, because it figures that I might not know this. Or we talk about, let's say, what's going on in the Middle East, and it gives me like some history about it or whatnot. Or like it gives me an expert opinion, right? So the idea is, how do we make ourselves smarter? Like actually, how do we raise our IQ points? So totally different demographics then. Well, kids might be playing VR. This is really for everybody. And yes, so how does this become a main computing device? I think the reason I'm bullish that this becomes a new computing device is because you have to question, how does AI actually change how we work? So my belief is that over the next 5 years, our work will continuously be less and less and less of brute forcing things. What I mean by that is like, you're going to be writing less emails. You're going to be designing less logos. You're going to be researching less, like by typing things in. Most of your workflows will now be yes, no directed and re-explaining, meaning humans become quality assurance for AI. That's the short pitch. Humans will become quality assurance for AI. So you wear these things. You might be wherever you are. You can be on the road. You can be traveling. Doesn't matter. And essentially, your agents come in with the results they had. And here's the logo we came up with. Good or not? We're like, yes, no, yes, I like it. No, change the coloring there. It goes back. It's going to take 5 minutes, 10 minutes to come up with a new version, sends it back, right? You're essentially just approving and disproving. Or here's the list of allocators we identified that are interested in virtual reality funds, right? Here's a script we came up with. You like the script? Sounds good, right? Reach out to them. We also identified their LinkedIns. Should we, connect them? Yeah, please do, right? Essentially, you were sitting in the seat of an executive, and agents replace a lot of employees, so to say. But that doesn't mean that everybody just becomes a one-man show, but rather, I think every employee becomes an executive of the role. Your head of IR is no longer just sending out emails all the time and replying to people, and an LP says, "Oh, I can't find my statement." No, that's all automated, right? It's like your IR guy will have in the morning coming in. Here's all the requests. Here's how we think of solving them. Looks good. Or you're like, I this one, change this and that, right? And again, this is all the time you say like, hey, I don't need a keyboard. I don't need a mouse. What I need is to be able to essentially 24/7, as things get completed, as things come in, be able to approve them. And like, you can do this verbally. It can show you things. Again, it can show you graphics. It can show you text. And that's the 80/20. And so to me, I think glasses kill the phone, not the computer. I think there will always be room for hardcore locked in work. Like, again, even if you're creative, like, yeah, you want to be, you're probably going to be in there trying to get things perfected down to the millimeter, whether that's on Photoshop or Final Cut Pro, like, in movies, music, and so forth. Like, professionalism still needs accuracy, and AI tends to be good at scale, but not at accuracy, right? So fine tuning will always have a place. But when it comes to this on the go, just, shooting things out, it's glasses. And funny enough, I was lucky enough to, because this also works for consumption. I was one of the first 50 or 100 or so to be able to demo Meta's Orion. So Orion, is their prototype of what the future of AR looks for them. This is not commercially available yet. They presented this last year in October, in October 24. But essentially, it is the complete experience of an Apple Vision Pro, but in the form factor of sunglasses that weigh about 90 grams. So if this one is 40, it's maybe twice size. So it's got thicker frames, but it is sunglasses. I mean, really, like, I would leave the house with them 100%. And when I did the demo, I was able to scroll Instagram. I was able to, like, let's say you were actually sitting in front of me, like there was this part of the demo, there's a woman sitting in front of me, we're talking about something, and while that is happening, I've got Instagram hovering here, and with my thumbs, I'm able to scroll, because you also have like a like a BCI wristband, essentially, that can track your muscle movements. And so I'm sitting there scrolling through Instagram. I can double tap to like stuff. I can go back. This is forward. I think double tap back is activating the AI. You scroll like this, right? I was able to take Zoom calls inside those glasses, right? So to me, that kills the phone, essentially, because everything that I would be doing on my phone, I can do on there, but probably even better. Like, for example, like watching movies, playing games, and so forth.
I'm actually bearish voice, though, because people don't, if I'm in public and I'm writing something, I don't want everyone to hear my message. So I think that's until we get non-invasive BCIs to be accompanied with your AR glasses, that's where I'm like, okay, well, actually, I think the phone is going to stick around for a lot longer because of the keyboard, essentially.
Very, very, very good point. Funny enough, I brought this up I was pitching a CBC out over in Japan, a big gaming conglomerate, and I essentially shared the exact same thesis I just shared. And he said, interesting. Like, that would probably not work well with us, like in our culture, because Japan is a very respectful culture. It's a very quiet culture where people keep to themselves. And so the idea that, I'm on the train and I'm just like talking out loud what's happening is like, it just does not fit into Japanese culture. I'm like, interesting. But that's exactly where, BCI comes in, which is why knowing that is one of the challenges makes me want to pay double the attention to BCIs. And I know BCIs are early. Like most of these startups we're talking like deep R&D. Like you will go to, you go to someone's apartment and they've got all kinds of like experimental stations in their building stuff. And like, it's so far away from commercial. Like we're really early, especially when we talk about like EMG, like the type that can actually, again, understand thoughts. So I understand words and things like that. Like if you want to go like full vocal, that's early. But then again, you have to zoom out and you say, well, guess what? Like if humanoid companies like Figure, Aptronics, and so forth, they're all unicorn, they're worth like 2 billion, 3 billion, 4 billion, 40 billion, 50 billion, right? The time to invest in them, like, and the funny thing is Figure, like, doesn't, from what I understand, Figure is not shipping any humanoids until maybe 2028. And then 2028, I think they're shipping like 2,500 units a year or some very small amount. And you can fact check me on this. Figure humanoid sales. But it's something very, very, very small. And it's loading. Yeah, Figure aimed to ship 100,000 humanoids within the next 4 years by 2029. Okay, so it's more than 2,500 a year, but still, it's over the span of 4 years, 100,000. It's definitely not enough. It's definitely not enough in order to replace the human workforce. And so then I asked myself, well, how do you actually, if humanoids can't replace the human workforce with like essentially with AI in the next 5 years, isn't it faster and easier to upgrade the human workforce with enhancements? So that, for example, whether it is giving them smart classes to be smarter and better, whether it's giving them an exoskeleton to be stronger and so forth, right? And this thing is today commercially available for, $200, $300. So if you were to, well, they even realize like 500, but like Mentor merch, which coming out there, like $300. And that's commercial, meaning they actually still have a margin on there. So if I am a factory now, or if I'm a company that wants to buy this at scale, the cost is much, much lower. So imagine enhancing your workforce IQ by 5 points or 10 points for $100 a pop, $200 a pop. It is a no-brainer. And so then to your point, BCI, if that is one of the few things holding it back, where, for example, the BCI founder that I spoke with, he mentioned exactly this problem. One of the biggest users of, for example, like, AI co-pilots like Cursor and Windsurf and so forth, are startup, like whether it's tech startups, whether it's the programmers using it, or also in finance, like so, like in Wall Street, for example, not for coding, but most of like talking to ChatGPT for analysis, right? Like it's their real-time and analysis companion. And all these guys tend to like voice because it's just faster, it's conversational, and so forth. But then if you have a whole floor talking, right? Like you might override what the other person's saying, so that like you have back noise, it's noisy, and to your point, you don't want to project to the whole world everything you're saying. You might want to be like a little bit more subtle, right? Quiet, like assume you work on your private Notion document. And again, to solve that problem, I think that's where BCI comes in. And so it seems like an early futuristic play, but I think the speed of things is accelerating, where the companies that feel 10 years away, they're really 5 years away. And the companies that feel like 5 years away, they're probably 2 years away. Because if you ask somebody in 2022 what the world would look like in 25, if we would be talking about like humanoids and AI at the scale that we have and smart glass, they probably said no.
All right. So if digital assets are being implemented by companies, nation states, et cetera, or not being implemented yet per se on the nation state side, but definitely companies, Stripe buying Bridge and whatnot, and it's definitely making good headway there, like making great progress. VR, yeah, as you mentioned, like kids 9 to 14 are all over 15, we'll call it, are all over VR deeply. We're just too old for that. A lot of people don't know that, but they're heavy users. AR, you're holding glasses right now. Like, you're showing us these things do exist, but we're a few years away from mainstream. Where do you put BCIs? Are BCIs still, like you mentioned, like kind of more experimental, or like more R&D phase, or like when will we have kind of mass market VR products, or sorry, BCI products?
For BCI, there's multiple different schools, but there's the two big ones. One is EEG. Well, let's keep it super simple, because I'm not an expert yet, but this is already like more than what most people would know. So like there's EEG, which is essentially a much lower frequency, where, for example, like these headphones, these are neurable headphones. So that's one of the companies we backed in Fund 1. EEG is strong enough to, for example, learn about brain health. It's strong enough to learn about like the emotional state that somebody is in, right? Like, is somebody in stress, right? Those kind of factors. And you can do this completely non-invasively by just having this touch the skin of your head and your ears and so forth. If there's enough skin, it can pick up EEG and learn about you. So, for example, what the initial version of this does is it tells you how focused are you. So, for example, the same way that my Oura Ring tracks my sleep, this essentially tracks like how locked am I to work, and then what can I do to enhance that, right? Like maybe I've experimented, for example, with I am more focused when I only use 2 screens instead of three screens. The third screen actually kills my focus, because all of a sudden I tend to always distract myself. Or like, how does coffee work for me? Or like, how is my focus at night versus in the morning, right? So you can get a lot of like brain data, right, through EEG. The next part is EMG. EMG essentially is the one where, for example, you need actual like as much surface touching with the muscles, right? Whether that is, again, I point here because, like, for example, like if you want to be able to like read thoughts, right? Like the whole idea of like being able to sense the electromagnetic outputs that your muscles essentially do, right? Like you want to be as close to the muscle as possible, so have as little surface as possible. Or you do it with the hands, for example, for typing, right? That's what Meta does, right? Meta has the wristband for the Rhine, so that way, even if you think about putting your fingers together, it would know, because that already admits it, right? So you can do wristbands to replace typing, or you could do something here to understand speaking, right? That still is only output, right? Like I output information towards my device, or like this input into device, right? Then there's invasive BCI, right? Where there's things like Neuralink. And there is a way towards getting towards a two-way street, right? Because all we're talking about right now is like, can we pick up information from like our emotional states, stress, and so forth, towards can we pick up information of like words, gestures, and so forth, towards can we actually send information to our brain, right? Can you directly connect you, like essentially, I mean, end game would sound like Neuralink, like, can you actually connect your brain to the internet? Can you connect you into your brain directly to OpenAI, right? That, for example, like anytime you think of something, like if I'm thinking, what year did Romulus kill Remus, right? Like the founding of Rome, right? Like I don't remember. I think it was like 500 40 something before, I don't know, something like that. I think that's when like the kingdom of Rome started, like the kings. But if I was connected to AI, you don't think anymore. You do an inference call. Your brain does an inference call. You get the answer, and right? And I think that's the real end game to like human upgrading, where then you say, people speculate, in the coming years, like AI will definitely take over, like AI will be humans. Ray Kurzweil wrote it, who's one of the leading futurists. He wrote about this already in the 90s in, I think it was the Age of Spiritual Machines, where he argued that, it's not that AI will replace humans or AI will beat humans. It's that AI is us. We created AI. It is a part of our evolution, except it's the first non-biological evolution, right? And so essentially we are allowing, in terms of Darwinism, survival of the fittest, we are enabling ourselves to continue to be the fittest by upgrading ourselves. And so I think, that's even further down the line. But before we're able to have something like Neuralink, right, you've got a lot of red tape there. I was going to say FDA approval. There's probably a lot of other approvals that need to happen before, like, are you legally allowed to like implant stuff in yourself when there's non-medical reasons to need it, right? Then there's going to be the first mishaps. If there's actually two-way street, there's going to be the first hackings. Like, imagine somebody hacks your brain, or like, people fry it. Like, there's all kinds of things that can go wrong. Non-invasive BCI, essentially, to me, is going to have several year head start and be able to serve a lot of people with like niche use cases ahead of time.
So when you combine all these technologies together,
Yep.
What I kind of see, when I think of the metaverse, it's really like this incredible future. It's like we're having Elysium, where like we can, live in this eternal bliss and all these great things, and we can learn about anything instantly, and we can recall all information, and we can like work is pure pleasure, and it's just like really, really, really great life. Is that how you kind of see the metaverse playing out in like an ideal set? Of course, there's going to be lots and lots of mistakes and mishaps, and it's going to be a bumpy ride for sure. But the end state in my mind is like, man, our reality is going to become incredibly great for everyone that has these devices, which in theory will be mass produced and cheap.
Everybody, yeah. I mean, most countries will have, like, most people in most countries will have them, unless there is a cultural reason why they disallow them. There's the utopian, there's utopian, dystopian takes, and usually the truth lies somewhere in the middle. The dystopian take is that a lot of world governments will actually support it because you're better off having your population, to use extreme terms, be sedated and happy in virtual reality than to be discontent with the nature of their real lives and take it to the streets, right? That's a dystopian take. I think the more utopian take is, there's a certain level of ascension that happens for us as a species, where we're going to tackle bigger meta problems, when, for example, we are no longer fighting to survive. Shelter is covered, food is covered, right? Basic, like you look at Maslow's hierarchy of needs, and the first rungs are covered, and we actually, think about, connection. We think about, self-realization. We think about purpose and all these things. And when I say solving meta problems, we're in the state of the world today, for example, literally today, that you've got different countries with different belief sets bombing each other, right? Whether that's, going to Esteba's religion, right? Like whether it's like Judaism and Islam and so forth, right? I think having a huge swath of the population having a lot of time and resources to spend time running simulations, I think there's a path towards getting to more global consensus through shared lived experiences, where a lot of this old baggage that we have from being so different, right, might actually be resolved, right? Because one of the reasons I think why people flock towards games and virtual reality is because they seek challenge, they seek meaning, they seek connection, right? And I find that both gaming and VR gives an outlet for that, right? And there's actually decently good book that's called it's by Hartmann from the guy from, he founded a big like gaming and VR company. Narula, it's a virtual society, yeah, from the CEO of Improbable. So Herman Arula, he wrote the book, I think Virtual Society. Is that what it was?
Hartmann Arula, their virtual society.
Yes. Yeah. So Virtual Society. So essentially he talked, so this is an interesting book that actually goes into this idea of like, um, he mentioned how games and stories were invented from the earliest of ages, essentially to connect, like essentially make people think about like philosophy, theology, gods, and so forth. Like you go back to like the mythical times of like, ancient Rome and Greece, right? And people, like we as a society have like a shared storyline and tale, so to say, that taught us about what is good, what is evil, like how we're supposed to live life, right? And even though they didn't have 3D graphics and didn't have games back then, right? Like stories like the Odyssey, right, are very visceral. Where like people would tell these stories, and like again, you have shared values that emerge as a result of it, right? And so in pretty much in the book, he talks about how again virtual worlds in the future, and much of like in a post UBI world where we don't work as much anymore, AI does most of the work, right? I think we'll be working more and more towards like figuring out what really is the world's value codex, and getting closer to it. So that's a very meta answer. But since this is an allocators podcast, you will also make a lot of money along the way, because ultimately, I think all of us will the same. If you take a middle of the road context and you say, you know what, a lot of the current physical world is status games, right? Why do people work hard? Like we don't need women don't need the Chanel bag. Guys don't need the Ferrari to live life. That's not part of Maslow's. Like, it's not part of survival. It's not part of food, right? It's some form of like social signaling and significance and so forth, right? Those games are infinite games that also expand in the virtual world, right? Not the good type of infinite games, but like, you could say AI does all our work. Well, people will still create hierarchies within virtual worlds. People still create hierarchies within the worlds where essentially there will be things to do. There will be value exchanged for ascending in that world. So the economic machine doesn't stop, is what you can also just realize by looking at that.
Yeah, I mean, you mentioned the shared experiences. I guess one of the fears I have about that is that we are already kind of seeing the departure of shared experiences, in the sense of like on Netflix, I have so many options, YouTube, so many options, on TikTok and whatever. I have so many options of content to view, and sure, maybe I'll send my friend a TikTok or an Instagram reel, whatever, and they'll view it. But then it's not like we're, back in the day when we were growing up, like we was like Lion King, Cinderella, there's like a few things to watch, right? And now it's like there's so much content out there, and we haven't even touched upon like the coming wave of AI video and everything like that. But everyone's having already almost semi-personalized content, and AI is going to exacerbate that, where I can see exactly the kind of content I want to see all the time, designed for Andrew or for Felix. And so I think that's also kind of an issue, is like, are we going to continue to have some shared experiences, or will we kind of become even more siloed in some sense and have our own like mini bubbles of our own realities of some sort?
I mean, listen, I think everything continues to be a power law distribution. Like personalization is on the rise 100%. We can tap into that in a second, but I think the meta culture still is a power law, right? We all know Harambe. We all have heard of Talk to a Girl. We all heard, like, there's certain like memes there's still shared experience for Generation Alpha, Gen Z, where there's an infinite amount of memes, but there's only a power law distribution of like a very few that have global reach, so to say, and they then become part of the cultural upbringing for that generation. They'll be talking about, again, Harambe is a good example, because like I think I was in college at the time. Like we still talk about Harambe today. There was a Harambe meme coin. Harambe was 2016. For those that are too old to know what, I'm not saying too young, I'm saying too old to know what Harambe was, right? That was the gorilla in like, I think Cincinnati Zoo or something like that got shot because like a kid climbed into the thing. And here we are 9 years later still talking to Harambe, because we just meme. I was gonna say we meme to death. No, we meme it back to life. So, and the same thing I think applies to content. Like, can you create endless amounts of AI slop with VO3 and so on and so forth? Absolutely, right? But I think the cream rises to the top, where there's a few things that will be culturally relevant that stand out to people, and they will continue to be able to also from, again, bringing it back to investing, build a meaningful franchise and build like actual staying power, right? Despite the fact that creation has been so easy in recent years, it is quite underwhelming when you go to the box office and you realize it is yet another Avengers. It is yet another Harry Potter's getting a remake. Lord of the Rings got a remake, and there's new Lord of the Rings movies, right? There was a Gladiator 2 even now, right? I mean, everything is getting franchised. I think, if anything, because we're living in an era where content is infinite, we seek the familiar. And so people are clinging more and more to the things that they're used to. And I even caught myself this weekend. I grew up playing a video game called Gothic, which was super popular in Europe. It was like the European Skyrim, if you want, the European Elder Scrolls. And lo and behold, I think the game's from 99. They're making a remake. So Steam is like top 20 wish list on Steam, right? Gothic remake, 25 years later, right? Could there have been many more games we made? No, it's like the exact same story of Gothic 1 is getting remade. Why? Because there's such a big pool of people that loved that game 25 years ago. So instead of making a new game, let's just make the old game new, right? And so I think that is one force at play. There is personalization, and I've got two different hearts to that. I think on one hand, we will trend towards infinite personalization, where everything in your life will become more and more relevant to you. And there are aspects to that I recognize in my own life I genuinely enjoy. Like, for example, like in music, something that's resonated with me is like AI music, where I take, let's say, a famous song, but I then put in the style of an artist I actually like, right? So like, I like alternative rock, I like metal, right? So I might take a freaking Adele song, but I make it sung by System of a Down, right? Or Linkin Park or something, right? And I was like, wow, all of a sudden I re-experienced something that was never that relevant to me, but like, I guess it was popular, and now it's relevant to me. Stuff like that I can see succeed. The problem is, once personalization requires too much creativity, it is going to fall a bit flat, because the unfortunate truth is most people aren't that creative. Most people just wanted spoon-fed, right? And if they did, then there's already been like text-based RPGs would have been way more successful. In fact, we look in these startups, so we come across these startups where it's like choose your own adventure, right? Like text-based, you can reply anything. The story changes as you are experiencing it. And I stopped one of my team members was presenting. I was like, guys, like, we had this stuff for like the last 20 years, but they were living in like message boards and forums, and there's like fan fiction platforms like Wattpad and whatnot, and while there are, hardcore fan communities, that's something that never went that mainstream, because the average consumer, to your point, like there's so much on Netflix, there's already so much to choose from. So you really need to personalize it, just sit down and choose for me, right? So if anything, I think before we get too deep into hyper-personalization, you're probably going to get, which also is more expensive from the production side on the AI side, because like everything would be, a lot of credits being used up. You're going to get materially better at content selection, right? Where you don't generate, but rather if you actually have set up great models, what are they called? Essentially, like, it's more of a I don't know why I'm playing right now. It's essentially more like of a crit search, where is able to search through every single movie that's ever been made, and it is properly labeled and tagged to then be able to identify, based on everything you've ever talked to that chatbot with, what would be the best fit. What are the top 3? Yeah.
Okay, Felix, this has been amazing, by the way. So I appreciate you riffing with me on this. This is the stuff that I'm obsessed with.
That's awesome. Love that.
Amazing. All right, Felix, we'll pause here and we'll do part 2 shortly.
Awesome.